All right, so welcome to Only Advice. My name is Husseini, and today we're going to talk about Sam Bankman-Fried, also known as SBF. He is the founder and CEO of the crypto exchange FTX, and he took a lot of people's money. He took billions of dollars and used it to place bets, to trade stocks, and lost all of it. So this is like $10 billion dollars that we're talking about. It's all customer money, and he pretty much threw it down the drain, committed fraud, and now he's going to jail. Supposedly, I mean, he did get convicted. His sentencing is in March. We're going to see what he gets. I'm thinking about 100 plus years, but let's break it down. Let's take a look. Here we go.
Over $150 billion. In 3 days, that's how much the world's 15 largest cryptocurrencies lost in market value. It's because of the crypto exchange platform FTX, which is behind this token, named FTT. On November 6th, the token's value began to fall, losing more than 80% of its worth in the span of 72 hours. Once seen as a survivor in a struggling market, the fall of FTX has sent shockwaves through the cryptocurrency industry. So, what went wrong? FTX is the brainchild of Sam Bankman-Fried. He's commonly known as SBF on social media. He's been previously hailed as a savior of the crypto industry.
You were called the JP Morgan of crypto.
Yep.
Does that bother you or not?
It doesn't bother me too much.
Bankman-Fried founded the quantitative trading firm Alameda Research in 2017. 2 years later, he started FTX, an exchange platform for buying or selling cryptocurrencies. Right now, he's the majority owner of both firms.
That kind of aroused some skepticism among industry players and traders, investors, stakeholders that there could be some sort of conflict of interest.
Okay, so pretty much what's going on here is the Sam Bankman-Fried guy. He's got two companies. Okay, he starts a company called Alameda Research, quantitative trading firm, in 2017, and then he starts FTX in 2019, 2 years later. Alameda Research is a trading firm, right? It invests money into different stocks, into different cryptocurrencies, into different, if you want to call it, capital markets, and seeks to gain a profit from trading. That's what Alameda Research is. That's what Sam Bankman-Fried started initially. And the money he was using to trade, that could come from anywhere at Alameda Research. FTX is an exchange. So if you guys ever put money into TD Ameritrade or Charles Schwab, or you ever trade on the stock market, you probably put your money on an exchange of some sort or a platform like Robinhood. A lot of new traders use Robinhood to trade stocks. That's what FTX was for crypto. So 2017, Alameda Research, then he starts FTX in 2019. And this was a really big deal. You're going to see how big and vast the reach of FTX actually was. We're talking about sponsorship at, different sporting events, rights to names for sporting venues. So he had a very long and powerful reach with FTX. But let's continue.
In terms of whether Alameda Research was getting preferential treatment on FTX, vice versa. But the official narrative that SBF gave in the past is that the two companies are separate entities.
After its launch, FTX attracted major investments from Silicon Valley and Wall Street.
We've raised a few $1 billion over the course of the last couple of years, and we're a profitable business.
It grew into the fourth largest cryptocurrency exchange for derivatives trading. Celebrities promoted the platform in ads.
I'm getting into crypto.
With FTX, you in?
It's FTX. It's a safe and easy way to get into crypto.
I don't think so.
FTX was gaining steam, and in the process often tussled with Binance, the world's largest crypto exchange by volume.
When FTX was getting started, Binance invested in FTX, and it was one of the crypto exchange's earliest investors.
So Binance is at this point one of the biggest crypto exchanges in the world, like this video is talking about. And FTX came on the scene. Binance invested in FTX, and FTX started getting bigger, right? A lot of hype around the company. So you just saw Tom Brady, Steph Curry, a lot of these sports players, athletes, even movie people. Kevin O'Leary, for instance, from Shark Tank, who's not a movie actor or celebrity per se, but he's a big-time investor. He was backing FTX. He was promoting FTX, talking about how smart SBF, Sam Bankman-Fried was, how great FTX was, what a sound investment it was. little did everybody know it was about to change real quick.
But FTX, as we know, grew really rapidly and became a very substantial rival to Binance.
As FTX grew in the industry, Bankman-Fried furthered his reputation as a crypto savior when digital asset prices collapsed earlier this year.
It's not fair to customers.
So Sam Bankman-Fried was somebody that was getting a lot of clout, a lot of hype, and people were really impressed by what they said was his intelligence, his understanding of the market, his understanding of the technicalities of trading crypto. The Some very renowned people that talked to him said we thought he was a genius, we thought he was brilliant, we thought he was the next big thing in crypto, and I just don't see it, guys. Like, if this guy tried to sell me something, I would probably walk away or just tell him I'm busy, and hang up on him. I think a lot of sales and a lot of convincing has to do with presentation. It has to do with not only knowing what you're talking about, but also presenting it in a palatable way where people look at you and they're impressed, right? This guy wasn't that. And I really don't understand how people were so taken by him, because when he speaks, there's not much substance to it, right? There's really nothing that exudes confidence, that exudes knowledgeable thought or knowledgeable, I guess, insight. I can't come up with the right word because I'm not a genius, right? I'm not brilliant, but I do think I'm a talent agent because when I see it, I know it. Okay. So I don't know how to act. I don't know how to sing, but what do talent agents do, right? They recruit people that do know how to do those things. And maybe it's my sales background because I have been a licensed mortgage lender for years now. So when I see somebody like this, I wouldn't give this guy a job, and I definitely wouldn't buy anything off this guy because he just doesn't seem like a sharp guy. And obviously he wasn't. He has no, what people would call long-term thinking, right? He's too short-sighted, and it's a flaw, and he paid for it.
Bailed out firms, spending about $1 billion.
But he did have that FTX money. So they're talking about how he bailed out these top firms. Take a look at this.
It's okay to do a
He bailed out firms, spending about $1 billion.
It's okay to do a deal that is moderately bad in bailing out a place.
But that image didn't last.
That is moderately
This
bad.
this guy on the left with the glasses on is just like, yes, I believe in you. I trust you. Whatever you're saying, it's correct. And that's the type of reaction people had with this guy for some reason.
$1 billion.
Watch him.
It's okay to do a deal that is moderately bad in bailing out a place.
But that image didn't last. On November 2nd, CoinDesk published a report based on a leaked Alameda balance sheet. According to the leaked data, Alameda claimed it had over $14 billion in assets at the end of June, but most of that was FTX's tokens. Alameda CEO Caroline Ellison tweeted that the balance sheet wasn't complete.
Caroline also said its financial situation is under control, the company is doing well. However, it seems like the market just didn't really buy that.
Okay, so here what they're saying, if you noticed, FTT is a coin that FTX, the trading platform or exchange, used to manipulate market prices, right? So right now they're saying the company was valued at $14 billion, or had assets of $14 billion rather. $10 billion of that was tied up in this coin. Now, for anyone that trades crypto, unless you're trading Bitcoin, which is still very volatile, but not relative to some of these shit coins, right? A lot of these shit coins go up and down thousands of a percentage or 1,000% in a very short amount of time. So $10 billion is wrapped up in this coin, and that's going to make people very nervous. Why? Because yes, your gains can be massive. You can have a tremendous amount of upside, almost unlimited, but the downside is even scarier, and people make trading decisions, really, most traders, out of fear. So if your assets are tied up in a coin that could lose 1,000% or gain 1,000% at any given moment, you're going to be afraid, and watch what happens because of that.
Then traders continue to withdraw from FTX.
FTX and Alameda did not respond to a request for comment. Things escalated on November 6th when Binance said it would offload hundreds of millions of dollars of FTT. Binance did not respond to a request for comment. The announcement sparked mass withdrawals. That day, FTX processed $4 billion of transactions, many times the normal amount for a day. Some got backlogged, which sparked demand for more. By November 7th, that number ballooned to $6 billion.
Backlog means you can't take your money out.
On the 8th, a day later, FTX's finances were in crisis.
Crashed.
Binance stepped in and said it would buy the company. It seemed like FTX might have solved its liquidity problem. But on the 9th, Binance backed out of the non-binding acquisition. The next day, the Journal reported that FTX used money from customers to fund risky bets made by Alameda.
It's a shocking revelation for a lot of people in the industry because even though there has been a lot of speculation about FTX and Alameda Research being joined at the hip, nobody could have foreseen that SBF was willing to transfer billions of customer funds at his crypto exchange to help his crypto trading firm.
Okay, so in layman's terms, just to summarize what the crux of the problem is, right? Let's say you put your money into TD Ameritrade. Let's say you put your money into Robinhood. You want to trade stocks, right? You invest $1,000 of your own money into Robinhood. Now, me being the owner of Robinhood, what I've done is I've taken your money that you invested in Robinhood for trading, and I've taken it and transferred it to my own account. Let's just call it my own personal investment account. So I've got your $1,000 in my account. And not only have I taken your money, I've taken everybody else's money who deposited in Robinhood. I've taken it out and put it into my account so I can trade. Now, for you, you see your money in your account when you log in. You think it's really there. But when you try to withdraw it, you get an error saying you can't, right? The money's not available. The reason why it's not available is because it's in my bank account. And what am I doing with your money? I'm placing really bad bets and losing a shitload of it, almost all of it. And that's exactly what happened with FTX. When people talk about FTX collapsing and crashing, that's how it happened. And I'm not going to get into the specifics of how Sam Bankman set up backdoors and actually set up the transfer of funds from one entity to another. But that's essentially, and not essentially, that's quite literally what he did. So here we go. Keep going.
Securities and Exchange Commission and Justice Department are investigating FTX, according to a
Securities and Exchange Commission, guys. SEC regulates all types of financial and, investment activity in the United States.
person familiar with the matter.
This is not like the New York Stock Exchange or NASDAQ. They take people's money, they borrow against it, it's not much disclosure, and then they trade against their customers.
A spokesperson for the Justice Department declined to comment. Bankman-Fried told investors that FTX couldn't cover withdrawals since its collateral was dropping in value and couldn't be liquidated, according to people familiar with the matter. On the 11th, Bankman-Fried resigned as CEO, and FTX and Alameda filed for bankruptcy. Afterwards, FTX said it was probing a potential hack. More than $370 million worth of crypto funds appeared to be missing, according to crypto analytics firm Elliptic. On the 12th, the Journal reported that Alameda and FTX executives knew that FTX had lent its customers money to Alameda.
So a lot of retail traders and investors I've talked to are feeling desperate or frustrated. The majority of the people in the industry could not have seen this coming because FTX is such a dominant player.
The fallout has led other companies to tout their reserves and call for more transparency in the industry. As of November 11th, according to the bankruptcy.
Okay, so as of now, FTX has gone to court and he has been convicted. So, he is guilty of fraud. 7 counts of fraud. He was found guilty on all of them. So what does that mean? Well, we're not going to know until he gets sentenced. He's convicted, but now he's going to have a sentencing in March. I will tell you this, though. So this guy defrauded billions and billions of dollars from unsuspecting victims. Some people put their life savings into FTX, 250,000, 300,000. There's interviews of people saying, I just lost my life savings and now I have to file bankruptcy. I don't know what's going to happen. You have other people who are sophisticated investors who lost millions of dollars, and there's no recourse for them because nobody knows where the money is. Nobody knows what Sam Bankman did with the funds. Um, so we don't know what's going to happen exactly, but let's take a look at an interview that Sam Bankman did, which his lawyer said not to do. I don't know what it is with these fraud guys, but they love going on Instagram and YouTube and Facebook and all types of socials and doing these interviews, and they sound really guilty when they do them. That's probably why their lawyers say to shut up and not say anything, but they don't listen. So let's take a look and see what he says. This is an interview with the interviewer asking him about what really happened. And notice Bankman doesn't have any type of accountability. He keeps making excuses when in reality, we all know what he did. So here we go.
There's a generous view, and the generous view is that you are a young man who made a series of terrible, terrible, very, very bad decisions.
And that's the story that Sam Bankman is sticking to, that he's a young man who just made terrible decisions that didn't know what was going on, even though he was the CEO of these companies.
The less generous view is that you have committed a massive fraud, that this is a Ponzi scheme, a manipulation of the system. And I want to start there because I think that there are so many people who have that question, which is, what is this? And what did happen?
Yeah, look, thanks for having me. And at the end of the day, I was CEO of FTX. And that means whatever happened, whatever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators in the world to do right by them, to make sure the right things happened at the company. And clearly, I didn't do a good job of that. Clearly, I made a lot of mistakes or things I would give anything to be able to do over again. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month. And, reconstructing it, where there are things I wish I had done.
I'm sorry, guys. I'm not laughing at the victims. I just, this guy is classic bullshit artist. He's like, I had no idea what was going on. I was so excited about the product. It's such a surprise how it went down. Like, give me a break, dude.
Done differently.
Well, let's talk about some of the things you.
He really believes that, people believe his bullshit. He's sitting over there going like, yeah, I didn't know what was going on. Like, I'm a good guy. Yeah. He's like shaking his head.
You would want to have done differently. But I don't want this to be an abstraction for folks because it's a lot of big numbers and often doesn't feel human. One of the letters I got, I want to read to you, Sam, because it's from a gentleman who said that he lost his life savings. And the subject line is Sam Bankman-Fried stole $2 million from me.
Ooh,
Says Andrew,
shit.
Can you please ask SBF why he decided to steal my life savings? And the $10 billion more from customers to give to his hedge fund, Alameda. Can you ask him why his hedge fund was leveraging long all of these S coins? I'm going to keep it polite for the kids. Please ask him if he thinks what happened was fraud. These are the kinds of letters that I've been getting repeatedly over the past several days. What do you tell this man?
Yeah.
You're shit out of luck, buddy.
I mean, I'm deeply sorry about what happened.
Or that.
Here's, the long and short of what happened. And I'll start by saying, just to make a distinction here, you look at the U.S. platform, you look at the international platform. The U.S. platform, it's a U.S. regulated platform with American users. To my knowledge, that's fully solvent. That's fully funded. And, I believe that withdrawals could be opened up today and everyone could be made whole from that none of these problems plagued the U.S. platform. Then you look at the international platform. for their non-US users. And as the letter says, Alameda Research did have a long position. And the international platform, it's a margin trading platform. It's a derivatives platform. It's a platform where all the clients.
I still don't understand why he says that, the American platform, everyone could be made whole tomorrow. I don't understand, why it's not happening. It's not happening because the money is lost. People are trying to withdraw their funds and they can't get access to it because Sam Bankman lost it all gambling on shit coins and dumb investments that went south. So, this interview is about an hour long. So if anybody wants to watch it, but really what you're going to get from this is, no accountability, making excuses. And the story is the narrative rather than set that Sam Bankman is trying to push is that I had no idea what was going on. I made terrible mistakes. And, yes, people lost money and that shouldn't have happened. But the one thing he's failing to realize or really accept, I think he does realize, is that he's the culprit. He's the reason why people lost all this money. And another note is, when you talk about people knowing what they're doing, Alameda and FTX had a conflict of interest with Sam being the president and CEO of both. So what does he do? He appoints another person named Caroline Ellison as the CEO of Alameda. Okay, so this was a girl who's now, I believe, well, it says it right here, 28 to 29. She was a math whiz when she was a kid, and she ended up becoming the president of Alameda and pretty much did what Sam Bankman wanted her to do. She testified in court. She did say, and this is her right here. By the way, the sketch artist in court did her dirty. If I could find a sketch for her, I'm going to show you guys. But they made Alameda, they made Sam Bankman look like, I don't know, they stepped him up like 10 levels. Made him look like Bruce Wayne. And with her, they made her look like she was melting. Like it was horrible. It was horrible painting. Um, but she did say that we knew very well what we were doing. We knew we were stealing from FTX funds. We knew that we were defrauding, and Sam knew that they were defrauding customers. And so, she puts on this narrative and story talking about they knew everything they were doing from the beginning. Okay. So it's not like you heard in that interview, just a bunch of dumb kids in over their heads, not knowing what the hell was going on. They knew exactly what was going on. Um, and here are some sketches from the court. So here, look, did you take customer funds? And Sam Bankman goes, no. Did you defraud anyone? Sam Bankman goes, no, I did not. I mean, what are you going to say, right? You can't really say much else. It's kind of obvious. Caroline Ellison, the girl that he appointed, she starts crying and she said she also offered to step down, but Bankman forced her to stay. So, a lot of pointing fingers. Obviously, she's a cooperative or cooperating witness. So she's obviously going to put all the blame on Sam Bankman and get a deal out of this. She's probably going to get some jail time too, maybe. Sam Bankman, I think, is going to get over 100 years. So I also want to touch on how big, SBF was, right? So FTX wasn't just some small time player. For anyone that watched sporting events, you would have noticed that FTX had huge advertising budgets on, Super Bowl, football games, NBA, baseball. I mean, they were all over the place. They had Tom Brady as a sponsor. They had Giselle, his wife at the time, as a sponsor. Who else? Kevin O'Leary wasn't. I don't know if he came out publicly as a sponsor on like on an ad, but he invested his own money and promoted them on national TV. So Kevin O'Leary is from Shark Tank. For those of you that don't know, he sits with Mark Cuban, and if anyone hasn't watched Shark Tank, do so. It's a great show. So FTX was all over the place. They had a naming rights deal for a stadium. They did a ton of promotional. We actually went to a Golden State Warrior game and they gave out like FTX bobbleheads. So this was the type of stuff FTX was doing. This is billions and billions of dollars. This kid went from nothing to, multi billions in a span of 3-4 years. So, this is a big deal. I also want to touch on some of the things that FTX was doing. And this stuff is wild, right? This is like donating money to political groups, trying to bribe politicians, trying to get um, Mohammed bin Salman from Saudi Arabia to invest. So it's crazy the amount of reach these kids had, and it's kind of sad, to think about what they could have done with the amount of resources they had, but instead they decided to steal and defraud billions of dollars from unsuspecting people. So check it out.
New testimony about former crypto billionaire Sam Bankman-Fried from his ex-girlfriend and business partner Caroline Ellison. The latest allegations include fraud, bribes to Chinese officials, and potential appeals to the Saudi crown prince. Bankman-Fried has pleaded not guilty in the fraud case. Errol Barnett has been covering this from federal court in Manhattan.
Caroline Ellison was visibly emotional throughout her testimony Wednesday, telling a jury her ex-boyfriend and former boss, Sam Bankman-Fried, quote, made me feel like an unequal
Yes, they were supposedly dating and in a relationship. I don't know.
partner, and called the failure of his business a, quote, relief that I didn't have to lie anymore. Ellison was the chief executive of Bankman-Fried's cryptocurrency hedge fund, Alameda Research. On Wednesday, she testified Alameda used $100 million of FTX customer deposits to bribe Chinese officials in a scheme to free up $1 billion worth of cryptocurrency exchanges that were frozen in China in 2021. They only settled on the bribery scheme, Ellison said, after attempting to regain that $1 billion.
So pretty much you invest money in Robinhood, let's say, or you invest money in a crypto exchange. What the owners are doing is they're taking that money and they're using it to bribe people in different countries so they could free up more money. And you didn't put your money in there for that purpose. That's why it's a crime.
Through accounts set up in the names of Thai prostitutes. CBS News legal analyst Ricky Kleeman.
There is very little about Sam Bankman-Fried's actions that Caroline Ellison did not observe or that she was not a direct party to.
Ellison pleaded guilty to fraud charges against her in December of 2022, shortly after Bankman-Fried's cryptocurrency business collapsed. And in another surprising moment Wednesday, Ellison said that in October of last year, with those businesses on the brink, Bankman-Fried allegedly considered selling stock of FTX to investors like Saudi Crown Prince Mohammed bin Salman.
It really is, in essence, with this witness, Caroline Ellison, he said, she said. She is charged as his co-conspirator. So she can talk about all of their interactions. And she's abundantly clear from the moment she hit the witness stand that everything she did that was a crime, she did, she says, at his direction.
Of course. And, she was complicit in it, right? So she obviously knows everything they were trying to do. She knows their true intentions. She was complicit in the crime, but she's cooperating to get herself a deal. These people thought that they would get away with it. They thought that they would be able to keep the scheme running. He was probably trading customer funds with the hopes of winning his trades, right? Making more money off his bets, leveraging other people's money to do so. And, it just didn't work that way. They ended up losing money because they were shit traders. They didn't know what the hell they were doing. So, there's a lot of interviews that you guys can watch where they interview Sam Bankman directly before he went to court, even though his lawyers told him not to do that. And, there's some interviews that go hard. They ask him, like, why did you take funds from this company and use them for your own benefit? And he always comes back to, well, I didn't know this and I didn't know that. And it's a lot of I didn't know. It's a lot of not being accountable for his own company. And the point of the matter is, he got caught. So he's not going to just sit there and be like, yeah, I fucked up, and I defrauded millions of people because I thought I was going to get rich and it was going to go on forever. He's not going to say that. So check those interviews out if you're interested. Thanks for watching. This is Only Advice. My name's Husseini. like, comment, subscribe. Appreciate you. Thank you.